Good morning, everybody. It is December the 16th, 2014, and we're all alive and kicking, ready to get out and shake that money tree one more time. Lots of news out overnight, lots of cross currents in the market. Price of crude is lower. Russia raised their interest rate from 10.5% to 17%. Gold's up a little bit. Currencies are up. The euro and the yen are up quite a bit. The dollar's off a little bit. As I said, crude prices are lower. Rest of the commodities are mixed. So we have a lot of cross currents going in the market. Chinese PMI came in with another big miss this morning, so the Chinese economy is slowing. No one's talking about it going into recession. But again, it's really hard to know what goes on in China and Russia and all these other countries because of lack of transparency. Momentum buying and selling is the rule for those particular markets. Russia's in serious trouble. One of the problems that Russia faces is, I think, about 40% of their budget is oil dependent. Lots of people have said that $100 per barrel is what is required for Russia to meet their current budget requirements. And obviously with the price of oil at $55 a barrel, it's going to be hard to do that. So there's a lot going on, a lot to be looked at. Now, when we have a market that has spiked before the day session opens, quite often that is the high. So this area right here, 2806 to 2813, the market has rejected prices right here. And what happens is that there's very little resistance or support when a market starts to move like this, but eventually resting limit buys and sells in the dome will eat up the surge in buying or selling. So we know we've got rejection above 06. We're at the buck right now. We've got the breakout from 28. So 29 to 25 is going to be buy one. And it may take ones to get in. Don't know. The easiest trade to see up here is a rejection to take out 8 to 12. It's an existing high. It was excess. The market moved when there was very little resistance. But like I said, quite often this is the high. The biggest danger we face this morning in the financials and the other markets will be plunge protection team intervention on the E-mini. Now, the Fed, if they do that, it usually comes 30 minutes or so after the day session opens. They'll let all the selling at the market on the opening be absorbed by the markets. Once that selling is dried up, they come in and actively. Usually they buy options. So if you buy an option on a derivative, they have to buy the call or the put they have to buy the future or sell the futures to support the calls or puts that they've just sold. So plunge protection team, the market is most vulnerable to that. Now, the Fed does not necessarily mind selling as long as it's orderly, but if they see just across the board selling, everybody dumping positions, and that's when they will stop in. And they have access to that information. The 5 banks that are deemed too large to fail are also the 5 primary market makers in the stock market. So the Fed and these 5 banks in New York are joined at the hip. So that's one danger that could turn the market around. My view is that this rally, if it does happen because of this type of buying, will be taken or viewed as an opportunity to sell. So the 2 trades that we see very early this morning are selling failure to take out the 8 to 12 area. And on the buy side, buying 25s to 09s, but me taking 01 to get in, and then 17s to 21s beneath that. So that's it for the note. Now, housing starts 1.038. It will be taken into consideration in permits 1.060. Markets PMI, which I think is a more accurate number. The ISM indexes starting in September of 2012 have been almost always a surprise to the upside. You can't guarantee it. If you're going to bet somebody's life on that being overly optimistic or cooked to the upside, I'd bet my spouse's life, not mine. But ever since the S&P 500 CEO was fired, and we're threatening phone calls from the Fed and our government, everybody, Fitch, Moody's, ISM, they've all been very, very cautious, ADP, not to upset the Fed's bandwagon. This is coercion. So market, which is European-based, is farther away from the hand of the Fed. So this number would be less than last month's, which was 55.7, I believe. So this is the news this morning. The focus will be the direction of the E-mini, in my opinion. If it's lower, we're going to be higher. If it stabilizes and comes back, we're going to be lower. The high was set in W period this morning. Looking at the bond, similar situation. The knob spread is increasing. Again, the fundamentalists, everybody's been scratching their heads. How can financials be up? Why are they rallying even in the face of quote-unquote better than expected economic news? Bond players and financial players know fundamentals, and they trade fundamentals. And the bond market has been telling us all fall that something was coming. Either the economy was softer than forecast or talked about or reported, or there was going to be some crises around the world. You sleep better at night if you're long treasuries. You sleep better at night if you're long crude. You sleep better at night if you're short the E-mini. That is not a guaranteed rule to make money, but it's a fact of life because surprises in the financials come to the upside, flight to quality. So the knob spread is expanding. It's above 17 now. It's holding those. So on this market, right now, we've got rejection at 15. And so the easiest trade to see is sell failure to take out 19 to 24, and perhaps 15. So this 16 to 24 area is pretty good resistance for this particular contract. And the low volume number happens to be at 24. As long as 24 holds, we can be short. The breakout came at 24.25. Last rotate down was 31.02. So this 1 to 5 is going to be buy one, pretty aggressive. It's not been very difficult to hit our number 2 points on this, and we'll play for 25, 21 for buy 2 for the breakout. Okay, Peter fixed my software last night, and able to look at all the markets this morning. Gold held up overnight. The Russian ruble is down. This flight to quality took us back up. We were higher in the overnight session. You can see we extended the range from the 5 to 7 area. Got lots of volatility. We've rejected prices above 20, so the easiest trade to see is selling failure to take out 20 to 24. Again, these spikes are done. They clean out the dome. All buy and sell orders are in this case, all sell orders were absorbed. So we can see rejection above 20. And if we can't get into this tail and take it out, then we do want to be short. Last rotate down stopped at 12, so we're at 16, 18, 10, 12 would be buy 1. And then our second buy will be 5 to 7. Why the Russian ruble rate increase was known down here, but when the other market spiked and took off, so did gold. So again, with these big price swings, with this extra volatility, you just put your trades on. They work or they don't. You don't think a hell of a lot about it. And you see what happens. It really is a next trade mentality or mindset. And that's the way it should be. It should be for everything. But we don't do that. So again, here we are selling failure to take out 65, 75. My guess is the high is in on this. So where do we buy it? We got a low right here at 12. We've got a breakout at 28. Got a single print at 40. We're at 52. So 30 to 40 is going to be buy 1. Why is the euro up? Obviously problems with the ruble. But the German and European ZEW index much higher than forecast. I mean, it actually doesn't make a lot of sense numbers wise, but they're expecting 10 and it comes in at 30. Germany's manufacturing and service PMI, the European Union's manufacturing and service PMI much high, came in higher than forecast. France's manufacturing PMI came in less. France's services PMI came in greater than forecast. So the economic numbers out of the European Union were better than forecast, and the market reacted accordingly. It was holding. It was pointed higher. London, the market breaks out from 24.75. A lot of support in that 24.95, 25.10 area. The breakout came from 25.25, and then rejection has come basically at 75. I do think this is a selling opportunity. I don't think anything has changed in the EU. I think conditions are marginal over there economically. But lower energy costs, if it weren't taxed to death, would definitely support or help their economies. Okay, the selling. Well, we talked about Saudi Arabia, mentioned 60 before I went on vacation. We said 60 and probably stops below 50. The Emirates or Qatar has said 40 is the target, and OPEC wouldn't be meeting even if prices went to 40. And there's a Zero Hedge article out about the Saudi playbook in 1985. So I'll post that into the room, and you can read it after the market closes. But I've been through this 4 times before, and when OPEC fights for market share, you know, out of all of OPEC's oil, if I've got a 25% market share, I'm going to get that. That's when the bottom falls out of the crude oil market, and that's what they're doing right now. Putin, the mullahs of Iran, all the other dictatorships, they won't suffer. But their social programs will suffer. So we've just made another new low. We've got rejection below 54. I don't see any reason for the market not trading lower. So stops below 50 are within reach. So 53.25, 53.50 will be buy one. And we'll circle 75 right here. We got to take that out, obviously, to get there. Then 275.53 even will be buy two. I don't see anything out there that could rally us. Tomorrow's inventory reports will probably be ignored. So our 54.50, very, very aggressive. And like I said, you can't put a whole lot of stock or faith in these numbers. I mean, you got extra volatility. Your stops have to be wider. It's going to be fairly easy for numbers to be taken out. It is an extreme example of a go-with market, so you just jump on board and hopefully you get a ride. And if you don't get the ride, you start over again. And I'm not being flippant when we talk about, but it just reflects the market. Now, when you get into bigger size, these volatile markets, most people play with fewer contracts, and they make the same amount of money and usually more on trading fewer contracts because of volatility. Just have to give yourself some room. Okay, that you can see before the spike in V that the E-mini was kind of holding its own. Value was there. On a volume basis, we had a pretty square distribution. And perhaps some volume a little bit more on the upside. We do get our move out of the middle. We have rejected prices at 95, and then the market spilled. So right now, 75 is resistance. So picking up this low right here, sell one, 75, 77. Somewhat aggressive, picking up the overnight low where it spilled 80 to 82 will be sell two. And again, there's a pretty good chance that the low is in. So 65, 67 will be buy one. We want our setup. It's retesting this low. And then 60 to 62 will be buy two. The 75, 77, it's aggressive, but, you know, it's the way it is. We've got very volatile markets. They're big markets. They're moving quickly. You really can't dwell too much on who's doing what to whom, or you just have to put your trades on and then see what happens. Okay, starts 1.038. It will be a factor. Permits 1.06. PMI 55.5, lower than last month's. I, for one, believe markets PMI numbers more so than I do anything ISM puts out anymore. But the market trades ISM. They don't trade PMI. So the question mark for us is the low in the overnight session. If it does hold, the market can come back. If I didn't want to get the full plunge protection team going, that's the way I would play it if I were the Fed. And then the danger is wholesale selling off the opening, plunge protection team intervention. And the way we'll see that if the market does start to sell with volume is that the 50-lot player will be buying every new low price. That's the way that we can check it. Okay, it's going to take at least 20 minutes to get everything going. I'm going to get busy on that. Be back with you as soon as I can.